Let's touch base now with the management of Future Logistics. Future Supply has been very impressive for the business. Outlook on margins and sales growth continues. The eBay bill implementation has improved, and which is supposed to be a big plus for logistic companies. Asset light model for free cash flow is about 36% CAGR revenue. 18 and 20. Mayur Toshniwal, who's MD and CEO of Future Supply Chain Solutions, joins in with a deeper understanding of the business. Mahesh, it's great to have you on the show. It's been a strong set of earnings. Take us through the highlights on what's contributed to your top line growth, and can you maintain this trajectory?
Yes, as you mentioned, I think we have been able to deliver what we had actually planned for. And so the top line of 775 crores for the whole year has actually surpassed what we had planned for, or what the market was expecting actually. Going forward, I think there are multiple things happening. One, of course, because of the GST implementation, because of the EVA bill, etc. We believe that the market of this value-added logistics or value-added supply chain, which is the kind of space which we are in, I think that is showing very strong positive tailwinds. People are showing, the potential customers are showing a lot of interest in revisiting their supply chain models, and which would mean substantial benefit for organized players like us. On the other hand, we also have our anchor customer so we are fortunate to have a situation where they're growing pretty aggressively, and their own plans are also very robust as far as the coming few years, the coming few quarters are concerned. So both aspects put together, I think we are looking at a growth trajectory which is probably even better than what we have done in the recent past.
Right, your margins have declined to 14.4%, lower than the previous quarter, and lower than, of course, Q4 FY17 too. What's been the reason behind this?
Well, you see, first of all, a 14-15% EBITDA by itself is a very healthy number. So on a quarter-on-quarter, this is a minor thing. But you see, when we are at a stage where we are, I think we are looking at getting into a few sectors and actually capitalize on some of these growth opportunities which I was talking about. And sometimes there is a little compromise which one may have to take in terms of margin versus the top line growth. I believe that we are in a situation wherein the market is very, very well poised for us to grow substantially. For example, we are now getting into increasing our footprint in the food business as far as the anchor is concerned, and even otherwise. Now, food per se is a very low value, high volume kind of a business, and sometimes the capability of the customer, and in our case right now, let's say it's the anchor, sometimes there is a little compromise on the profitability, basic profitability, and which is what is leading to that marginal dip in the EBITDA as far as last quarter is concerned. We've also added, when we are talking about increasing the footprint in the food business, we've added a lot of space in the last quarter. And as you would know, some of this takes time for the entire juice to come out, or the entire capability or capacity of that added space. So I don't see much of a concern, but yes, when we get into sectors like this, there could be a marginal reduction in the EBITDA percentage.
Right. Mr. Toshniwal, so what's been the impact of GST on the sector and your company? Because analysts are saying GST will be a huge enabler to improve supply chain efficiency. Would you agree with that?
I'm personally very, very gung-ho about it. I think the industry is in a sweet spot at this point of time. It is an opportunity which is now available to customers to go back to the drawing board and revisit their entire supply chain model. Because historically we've always grown up the industry has grown with a very fragmented and extremely inefficient supply chain model, which basically meant because of GST, you had to have a supply chain which was more state level supply chain and never a centralized supply chain. So the industry has never really witnessed scale and efficiencies which some of these newer models can actually offer to them. After GST now, people are showing a lot of interest in as I said, revisiting their entire supply chain model. So I would say that for our kind of players, so we are focused entirely on the consumption sector mainly. And in our kind of sector, I think people are showing a lot of interest in centralizing their supply chains. So overall, I think for the sector, this is an extremely important impetus which is available.
Okay. Your company is also, Mr. Toshniwal, a major beneficiary of increased demand in third-party logistics and has been maintaining expected growth trajectory as well. What kind of demand are you seeing, and what kind of potential does this hold?
I think it's the whole sector, just to continue from what I was saying earlier, I think the sector is witnessing a good demand, and this whole centralization, the kind of scale and efficiencies which are coming in because of the revised model, we tell people that this is now a specialized business. Manage large scale warehouses and large scale supply chains is no longer or should no longer be their own baby, which is what most people have been doing. So they have been managing their own warehouses, managing their own transportation in the past. But now the game is getting slightly different. In the revised supply chain model, it makes far more sense for customers to actually go for the 3PL kind of a model, because now the supply chain management is no longer just about managing a warehouse, but it's a very large play of technology and automation, which actually people like us can bring to the customers.
Right. Your business model is unique and is different from other logistic players focusing on contract logistics, which is 70% of the revenues, rather than movement logistics, which is 65% of the industry revenues. Tell us if the revenue share will continue and what is the outlook for on your business strategy?
I think while we are in three key lines of business, which is the contract logistics, express logistics, as well as temperature controlled logistics. But the mainstay of our business model is actually contract logistics. And that is where we have been able to create certain amount of domain expertise. We've been able to bring in the best in class technologies, automation, etc. So this is in a way a true differentiator for us. Contract logistics is where we focus most of the attention on, and we believe that we can actually add substantial value to the customers at this point of time, especially in the consumption sector. So yes, going forward, while all business lines are important, but I think contract logistics is the largest segment for us, and we'll continue to focus on growing in the contract logistics. As I said, there's a lot of opportunity which is available in the market, especially on this side. Routine transportation is not much of a value add, frankly. I think there's not too much of a role of technology in that. So even in transportation, if you notice, we focus only on the express logistics part, which is where there is a certain amount of value addition. There's a role of technology in that.
How is your new acquisition working for you? Are there any other acquisitions planned?
It's early days, so it's just come into the fold. We are, of course, now looking at the whole integration process, wherein the whole last mile delivery capability now comes into our footprint. So we are now able to offer to our customers also the last mile delivery, the B2C part, as far as our existing customers are concerned. We believe that there's a lot of integration benefits which are on the anvil. So currently we are in high speed, in a high gear as far as managing this transition is concerned. I think we'll stabilize this first, and I don't know whether in future if there is any other opportunity which comes in terms of acquisition. I really can't comment much at this point of time.
Okay. The much-awaited e-way bill as well, Mr. Toshniwal, is finally getting implemented in phases across the country. According to your checks with various stakeholders, how has it affected the entire supply chain?
It's a very important step, a step in the right direction. I think it's been delayed substantially, but I'm really thankful that it has finally gone off the anvil. It's already had a start. Now, prima facie, it is working quite well. I believe that once it gets rolled out across the country, I think the benefits to the industry as a whole, and especially the benefits to the organized players like us, I think should be quite good. So, organized transporters, organized supply chain players, I think this will make the whole transportation, the logistics part more efficient and more transparent. And I think the regulatory requirements which will be put onto this means that organized players like us will benefit.
Okay, so do you foresee unorganized players slowly on the way out then?
I would say that the unorganized players will have to organize themselves. I think the industry is very, very highly fragmented, but it's a very natural evolutionary process, happens everywhere, happens across industries, and I believe the same thing will happen. So people will kind of have to shape up or ship out, so to say. And I think that's what is going to happen even in the transportation sector once the e-way bill and the regulatory requirements take full shape.
Okay, so then give us your sense on how you're going to be looking into the future. What is the kind of long-term growth trajectory that you see for your business?
We have acquired those capabilities, and I would almost entirely agree with that vision, I think, which you've just spelled out. So we would like to be the most capable, the most respected player in our kind of space. The whole world of supply chain, the Indian industry is a very, very large industry, runs into lakhs of crores. We play a small role in a small segment, but in the segments in which we are present, we would really like to be the leaders. And that leadership will come only when you are able to add substantial value to your existing and potential customers. And actually speaking, that is really what the attempt is. So as far as the anchor customer, Future Group, is concerned, I think our attempt is to add value, make the whole supply chain very, very efficient, right from start to end. And as I said, we are now beginning to play a more relevant role in the food supply chain, which is actually quite a tricky business, because for the group, for Future Group, it's a relatively a low margin business, and cost sensitivities are substantially different. Plus, it's a very, very decentralized business, because the vendors, all the brands, etc., who you deal with, their supply chains are geared like that. So this change, while seemingly small, is actually purely from supply chain angle is a fairly substantial change and needs to be tread carefully. So the attempt is to actually increase the efficiencies across different LOBs or different lines of businesses as far as Future Group is concerned. I think we've showcased that already in the fashion and general merchandise side. I think wherein we brought absolutely world-class technologies to improve the overall supply chain efficiency substantially. And the next forte would be, or the next area where we would now be focusing, would be the food supply chain.
And we wish you the very best for the future. Thanks very much for joining us, Mr. Toshniwal, and giving us your perspective on the business and how things are shaping up.